Global Edition. Daily World News Bulletin. The Precious Metal Problem. Tuesday, May 5, 2026. All news verified by Grok with real-time X.com references. Deep Dive: The Precious Paper Problem. Western Bullion Markets versus Physical Reality. Hey everyone! Today we're going deep on the growing split between paper gold and silver prices in the West and the real physical metal everyone actually wants. Western markets like COMEX in New York and LBMA in London run on paper promises. You buy unallocated gold. That's basically an IOU from the bank. They can lend, lease, and resell the same bar of gold dozens of times. Most futures contracts never take delivery. Less than 1% actually get physical metal. On the other side, you have Shanghai Gold Exchange and physical buyers in China, India, and the East. They demand real bars up front. You pay, you get title to specific metal. Over 90% of contracts result in actual delivery. No IOUs allowed. That difference is creating massive spreads. Shanghai silver often trades at 10 to 13% premium over London spot. Gold premiums have spiked to $40, $60, even $70 in tight times. Arbitrage should close that gap fast, but it doesn't. Why? Because there simply isn't enough physical metal to ship and close the gap. China wants bars, not paper. Look at the data pouring in on X right now. COMEX open interest for silver collapsing to 15-year lows. Registered inventories low and volatile. Miners and producers walking away from paper shorts. Physical buyers routing straight to Asia at big premiums. JPM and big banks quietly stopping contracts to grab metal. Central banks and institutions are voting with their feet. They're pulling gold out of London vaults and heading east or taking delivery themselves. Germany, Netherlands, China, India, Poland all repatriating or stacking physical. The old Western benchmark is losing control. Andrew Maguire and other traders on X are calling this the end of Western dominance. Liquidity fleeing to BRICS exchanges. Backwardation in futures meaning nearby physical costs way more than paper promises. Shorts in ETFs like GLD and SLV will eventually have to cover. Price targets floating around $8,000 gold, $80 to $200 silver as reality catches up. Bottom line, in plain English. Paper prices no longer tell the true story of scarcity. When everyone wants real metal at once, the IOUs will break. Physical stackers and Eastern buyers are winning. Western paper holders are holding counterparty risk. This divergence is not going away, it's widening. The system that turned gold into just another derivative is cracking. Markets and AMP. Crypto snapshot silver holding strong near 73-76 zone with Eastern premiums firing. Bitcoin steady around 78K. Ethereum near 2,350. Physical metal still king. Generational news. Gen X stacking real bars in their own vaults saying, paper burned us once. Millennials finally getting why grandpa demanded delivery. Gen Z learning, not your keys, not your coins, applies to gold too. Gen Alpha already asking why anyone trusts bank IOUs. Like, share, comment, and subscribe. This has been the Global Edition, Metals Deep Dive. Stay physical and stay informed.